Please come to this next paragraph, financial restructuring. Another area of investment banking is financial restructuring. That means companies which are in distress. What is the meaning of companies which are in distress? They have losses, huge debt. Okay. Bring before your eyes Vijay Mallya. Okay, then you'll understand easily. Vijay Mallya, huge debt, defaults. Okay. Assets are not sufficient. Cash flows are not sufficient. And these companies have two choices. What are the two choices these companies have? One is liquidate, and the other is to restructure, to revive, to reorganize, to find some ways so that the company can survive. And once it survives, then again in the long run, it will become a normal profit making companies. And here comes the role of investment bankers, because they will help the companies to restructure and get out of the red. Get out of the red means they will come out from the losses and one day they will make profit making. So they will identify which are the areas which we need to sell off. Okay. Which are the areas where we need to disinvest, give up our control. If required, they will suggest change in management also. They will say change your top management team also, change your CEO also, change your MD also. Okay, change your technology, the way you distribute. So lot of things they suggest, but our focus would be mostly on financial restructuring. They might ask you to issue more, say, equity, bring strategic investors. They will arrange for the sale of the division, etc., which otherwise it's difficult to sell because they have got network connections. So what does it mean to restructure? When a company cannot pay its cash obligation, for example, it cannot meet its bond payment, it cannot make payment to other creditors such as vendors, or when a company goes into bankruptcy mode, so that time the company has two choices: either shut down and walk away, and the second option is the company should restructure and remain in the business. Okay, so what should Air India do? Shut down or restructure? So what they are doing for restructuring? They are trying to sell their stake to other company. If nobody is buying, they are trying to bring more equity. Government is infusing more equity into that company. So therefore the idea is to keep it afloat, not let it sink. Okay, and one day maybe they will become profit making company. So what are the two types of restructuring we will discuss? Our focus will be on financial restructuring, and one paragraph is also dedicated for organizational restructuring. Sometimes you need to change the way organization is structured. That means how your hierarchy is there, how is your top management, okay, how is your production design, sales policy design. So that is organizational restructuring. So restructuring from a financial viewpoint involves, so what is financial restructuring? Remember that intermediate chapter, internal reconstruction, external reconstruction. Internal reconstruction, external reconstruction, if you have done in accounts, you will realize a company is into loss making mode. So what they do, they call a meeting of their creditor, preference shareholder, okay, and renegotiate the payment terms on debt obligation. You have to renegotiate. You have to tell them, see, in any case, you are not going to make the payment. You are not going to receive the payment. So what you do? I suggest you waive interest. Okay, we can't pay you interest, but we can pay you only principal. What the lenders do? Agree or may not agree. Both options are possible. But some of the lenders, what they do, they say it's better to get something rather than going into disputes and legal matters, and then the court will decide after a lot of years. So that is settlement. Is it that they do settlement? That requires a lot of negotiation skills. So the investment bankers will do this on your behalf. Continuously they will follow up with the banker that why don't you come on the table and get your dues clear? Is it right? Some or the other ways, 50% principal waiver, 50% interest waiver, or the loan will be paid in 5 installments, etc. Loan will be converted into equity. Loan will be converted into preference share, or they may issue fresh debt. They will raise more funds so that the business will survive. Restructuring payables to vendors. So those who are your suppliers, you can also tell them we'll give you in 5 installments. Give me 20% discount, take 80%. Convert 50% into equity and balance 50% into debenture. So you have to negotiate with them. Whether they agree or not, that is your skill as an investment banking company, to convince them that if you don't agree, you may not get anything. If you sign, you will get something. And who knows, the company will turn around and then you will get all your dues. So financial restructuring, bankers provide guidance to the firm by, banker here means investment banker, not that usual state bank. It is I bankers, the one who is recommending or advising you on restructuring. So they will recommend sale of asset. Okay, there was a company called IL and FS. So they are also into a lot of debt. They are also going restructuring. They are started selling all those non-core assets. Okay, they are selling all their non-core assets so that they will raise money. So identify which assets are not required, which business is not required, and can we sell them? Yes, why don't you sell? And by issue of special securities. To raise money, you have to issue special securities, give some incentive to the investor, like convertible debenture, okay, convertible preference share, bonds, even selling the company entirely, if possible. If possible, sell the company entirely, merge with some other company, and then that other company will take care of debt and other thing. That is what loss making companies sometimes do. They get themselves being acquired by other firms, whatever may be the price, they sell themselves. But these are the things which somebody has to advise you, and then all the procedural aspect that is involved behind this is to complete. Liquidation is not easy in India. You have to take care of the interest of workers, bankers, creditor, debenture holders. First you have to make all of them agree, and then it is executed. Who will do all this? Yes, the advisor, investment banker. So what do restructuring bankers actually do? Investment bankers, their usual function is merger, acquisition, raising of funds and like this, but they also help in restructuring also. So their roles are slightly different from your normal activity. So main difference is that restructuring bankers work with distressed company. What is a distressed company? Distressed companies are companies whose business is on the bankruptcy path. They are either going bankrupt or getting out of bankruptcy or in the midst of bankruptcy. They are either going to become bankrupt soon if you don't take action, or they were about to get bankrupt but they have just managed to survive. Okay, or they are in the midst of bankruptcy. Is it right? That means they might get bankrupt. Okay, continue. So what will restructuring bank do? Restructuring banks are different from normal investment banking function because here they are dealing with companies which are in distress. So much distress that they might go bankrupt, or they are just coming out of bankruptcy, but they have to be maintained, survived. Otherwise again they will go into bankruptcy. Or they are just fighting the liquidation process. That means they are in very bad shape. They don't know what to do. On one hand, regulators are after their life. Banks and debenture holders are after their life. Court is after their life. Creditors are on their door. This fellow is totally in a distress situation. Okay. So then what will you do? You have to restructure. Go to a good restructuring advisor. So when a company's business suffers and it starts heading down the path of bankruptcy, its creditor, anyone that has lent it money, whether bank, hedge fund or other institutions, immediately take the notice. How do people know that you are into a bad financial situation? When you start delaying the payment, when you don't pay on time, when your check starts bouncing, okay, when your door is closed on a working day to avoid the creditor, when you don't take the phone calls. So then these bankers, debenture holders and lenders and creditors start understanding that something is wrong. A restructuring group might be hired by a company to negotiate with the creditors and get the best deal possible, usually in the form of a forgiven debt also. What is a forgiven debt? Karj Maafi, okay, which is quite popular in India. First you take loan and then you negotiate and say that some amount will not be paid. Forget the interest. 20% principal also I am not going to pay. If this is agreeable, then we'll make you payment of 80%. That too in 4 installment. Okay. What can I do if my business has failed? I tried my best. If this way, if you are running after my life, I will run my business. Okay. Or they might advise a company on how best to restructure its current debt obligation, either to get out of bankruptcy or avoid it in the first place. So these financial restructuring firms, bankers, they've got a lot of ideas, and according to the situation the company is in, they will suggest what you have to do to get out of this situation. Either you take more loan or negotiate with the creditors, lenders. What is the next big difference between a normal investment banking function and a restructuring bank? That restructuring bank must work within a legal framework. And what is the legal framework in India for dealing with such companies? Bankruptcy code. And they must have a more in-depth legal understanding than the other bankers, because bankruptcy code will come into picture. IBC, insolvency and bankruptcy code. Is it there in your syllabus also? Law syllabus or special law? Corporate law. That was also introduced only few years ago, because many business houses in India, they take money and they have no objective of repayment. Make a lot of money, take a foreign country's passport, visa, permanent residency, and move out of the country and enjoy their, in beaches for the rest of their life. Government says no, nothing doing now. Government says nothing doing now. If you have borrowed money, then we will have power to recover that money also. And even if you go to foreign countries, we will bring you back from there. So therefore in future it will become difficult for somebody to default, and if he defaults, then he has to pay for it. So what is an organizational restructuring? It is different from financial restructuring. Here we are making a change within the organization. For example, the whole management team can change. The entire board of directors of IL and FS was changed. Okay. Director, managing director, CFO, everybody was thrown out, and the whole new team has come to revive or restructure that organization. Possible. Then strategy may have to be changed. Now the strategy can depend on what is that company. You may have to change your product model, technology, distribution network, okay, sales policies. Okay, so that is strategy. And then your focus may have to be changed. Institute has not discussed in detail about organizational restructuring. Only one small paragraph was dedicated for organizational restructuring. We are financial management student, so our main focus is financial restructuring. iBankers with expertise in reorgs. What is reorg? Reorganization. So in iBanking, there is a department sometimes for dealing with reorganization or distressed companies. That is also their specialization. Many people think that it's a boring department because you have to deal with all companies which are into distress. Everywhere there is a sadness. But these companies, they are very smart. They make a lot of money out of this kind of transactions. Is it right? And they get huge commission or fees also for such activities, because they know people in different parts of the world who can take a stake or an interest in that company. They bring such parties together and they make a huge amount of profit out of it. So these are expertise in reorganization, can facilitate and ease the transaction from bankruptcy to viability. Of course, they render you the service also. A company which is about to get bankrupt, with their restructuring plan, they can make it viable also. They can make it survive also. So typical fees in a restructuring. Now see, this company is already into a bankruptcy mode. So you have to deal very strategically with such people in terms of fees. Okay. So fees in a restructuring depends on whatever retainer fees is paid upfront and what new securities are issued post bankruptcy. So they may charge you retainership fees. That means we will provide you service on a monthly basis and you pay us some X amount. And in case you make a new issue of share, then they'll get commission, some percentage of that post issue amount. When a bank represents a bankrupt company, the brunt of the work is focused on analyzing and recommending financing alternatives. So you have to do a lot of homework here. When you take the task of a distressed company, then there is a special team which looks after the distressed companies. What they do, they identify what are the various ways in which we can raise money for this company. Can I sell some asset? Can I issue some debt? Can I issue some equity? Can I issue convertible instrument? Can I sell this entire company also? Okay. So some or the other ways they will try to find out which is more viable, which is more profitable, which can be executed fast. All these parameters they do. And then they go for that kind of plan. They tell the management this is what we are going to do. And then they accordingly do that transaction, get the fees. Thus the fee structure resembles that of a private placement. They take some share in that amount also. How does the work differ from that of a private placement? How does restructuring differ from a private placement? Do you remember private placement? What is private placement? Securities are issued to few people, selected people, strategic people, so that it saves time, cost, energy. Okay, and the concentration is only in case of few people. But in case of restructuring, it is not like that. iBanker not only work in securing financing, because here your task is more complicated. First of all, raising of funds here is a challenge. You are dealing with a distressed company, loss making company. Private placement, they deal with good companies. So that challenge is not there, that people will not be interested. You have to just find the right people. Here it's very difficult to get the funding, and you have to also assist in building the projection for the client. Okay, that means you have to hand hold projection. Here you are a loss making. How do you make projections? At least they will prepare an Excel sheet like you do in the office. And what will happen if the firm can revive? What will be sales, profit? Something you have to show to your lenders, the new lenders. Then they help in renegotiating the credit terms with the lender and helping to re-establish the business as a going concern. So this is the work. They may even do a lot of outsourcing work. Suppose all your accountants have left. So they may help you to get outsourcing of accounting work. You don't take too much of fixed cost burden on you right now. Okay. So whatever you can delegate, outsource, you can delegate. Bring the company on the track first, and then you can again start like a normal company. So they do a lot of hand holding at this stage. Hand holding means support. Company requires support because many key employees left. Where will employee go? He will not remain with you. If he does not get his salary for 2-3 months, tata. He also has to look after his family members. So during this period, they help you with all other activities, because a firm in bankruptcy already has substantial cash flow problem. Sometimes they don't have even cash to pay salary of 1 month to the employee also. They don't have cash to pay the TDS which they have deducted for others. They don't have cash to pay the PF also, which they have deducted from the salary of the employee. That is the problem. Investment banks often charge minimum monthly retainers, hoping to cash in on the spread from issuing the new securities. These investment bankers are also smart. They know that if the deal becomes successful, then they'll make a huge amount of profit here. Like other public offering, this can be highly lucrative and steady business. Okay, looks boring, but if you talk to investment bankers, this is a big bread and butter source. Okay, so many companies are in distress. They need some help. Okay, so many defaulter companies are there. So they help them to restructure, and then they make money out of it. They sell your asset basically to another related entity. To you, they will say, oh, this property is not good. You sell it, whatever money you are getting, take it, otherwise you will not get that amount. So their management will be made to think that it's better to sell at $2 billion. To other company, they will sell it for $8 billion. Yes. But that is their strategy. Both are benefited. Challenges in investment banking. Now don't think about too much of ethical issues involved here. They have to make money. These are investment bankers. They are like sharks. Okay. They are there to make the profit. The salary and the bonus of the people working on such projects depend on how much profit they generated for the organization in the deal. And as I told you earlier, sometimes their bonuses are 2-3 times of the salary. So many times they tell me, we don't work for salary, we work for bonus, because that is something which is a big amount. So some of the challenges in investment banking, although you may find it is very lucrative activity, but there are a lot of challenges also, because you have to do really hard work. Some of the challenges in investment banking are existing due to reason that in 1990s broking firm, credit rating and other financial services were owned by investment bankers. So can you visualize the implication? Lack of independence. Credit rating company is owned by investment banking company. So of course there is a clash of interest. In the earlier 1990s and even in 2008 crisis in USA, which spread to many other parts of the world, a deep research helped us to know that credit rating companies were not fully independent. That means even a bond whose rating should be, say for example, C grade or D grade, which means junk bond, means sub-grade bond, okay, they have rated it AAA, AA. Yes. There are books who have discovered this kind of thing, have written in their books also. And many of them books were about to be banned also. But then they have written. In one book it was written that one assistant, whom we will call article in our discussion, he was working in a credit rating company as a assistant, what you call articleship in India, or interns. He found that this company has a lot of problem. He went to his boss and he told his boss that we don't think this company should be given A rating or double A rating. Boss said, you have done your work? Yes. Did you have lunch? Yes, sir. Okay. Now today you can go home. Your next assignment is so and so. Okay, you have done your job. Go ahead. We will take care now. And this article was stunned to find that they have given a high rating, even though there was a problem. So this was problem. Lack of independence. Haji? In your business also, your boss will say, on the same day, go to other client. Okay. That is the difference in India. We try to maximize the use of the time of the article. And in case there is no work, they will say, go to my home and get the cylinder filled. Now, next point. Hence, due to reasons of losing the other businesses from the company, they may not be so fair in assigning the credit rating to the company concerned. This is a global challenge. So now what they have done in USA, credit rating company cannot be owned by the investment banking company, or it should be in no way related to investment banking company or the company, etc. So they have to give a undertaking, the credit rating company who gets the job, that there is no way we are related to the company which is going for rating. Okay, like auditors in India do nowadays. If you are holding any share or any of your family member is holding any share in any group company, then you will not be assigned that kind of audit. Okay. Further, in order to keep the favorable perception of new stock in post issue, they might sell the share holding on behalf of their client in the market. The next problem is they might manipulate the market also to keep the share prices high. So manipulation is possible because they've got huge money power. Huge money power. So they can even influence the market. Next challenge is pricing of new issue, as it would not only result in, it should not only result in fair pricing, but should be a win-win situation for both the investor as well as the company. What is a fair price? Nobody knows. If you ask me as a teacher of SFM or as a student of SM, finding the fair price of a share is very difficult. So they have to find a fair price in such a manner that investor is also happy, company is also happy. Next challenge is valuation of share for the exchange is another big challenge. As investment banker, as it should be acceptable to both the companies involved in the process. In mergers and acquisition, when you will become a mergers and acquisition specialist, you will find that whatever exchange ratio you decide as a advisor, one of the two parties in the deal, either the target company or the acquiring company, they will not agree. Both of them usually don't agree. The shareholders of the target company feel that they are shortchanged, they are not given proper valuation. Some of them even go to the court also and say that no, this deal is not acceptable to us. So finding a right exchange ratio is a challenge. In new issue management, compliances of various law. In India it is too much. I don't know about other countries. You have to comply with Companies Act, Income Tax Act, SEBI, all GST, capital gain tax. So you have to ensure that all compliances are done before you can finally raise money in the market. And if there is any lapse, it may attract a lot of interest and penalties. Like Vodafone case, some thousands of crores of rupees they have received demand from the government. 10,000 crore rupees demand from the government because there was a lapse on some compliances. Is it right? And now that court case is going on forever. So many amendments have taken place in the Income Tax Act. Government somehow wants to recover that money and make itself rich. Is it right? But this time you're not dealing with an ordinary entity. That is also Vodafone. They will go to the international court. Okay. Recent development in investment banking. Investment banking was a lucrative business till the arrival of the financial crisis in 2008. Earlier, when you go to IIMs, Indian Institute of Management, and you ask the student before 2008, because my friend was studying in IIM Ahmedabad and I had gone also to visit IIM Ahmedabad once, how it looks like from inside. Okay. So then I spoke to a lot of students there. Even my friend also, who is now working in an investment banking company, JP Morgan. So when you ask those people in those times, where you want to work after you pass out from IIM Ahmedabad, invariably most of them were answering some or the other investment banking. Somebody was saying, I will go to Goldman Sachs, I'll go to JP Morgan, Morgan Stanley, Lehman Brothers, and like this. Now if you ask them, try your luck in case if you meet some IIM graduate, where do you want to work? You will not find 80-90% of them will say that I want to work in a investment banking company. Now they may say we want to work in a startup company, an e-commerce company, or companies like HUL or Procter and Gamble or Colgate where we can work, or will work in Flipkart. But they will not everybody will say that we want to work in this big force, this big investment banking companies, because scene has changed now. After the collapse of Lehman Brothers, which was one of the biggest I bank, now people are scared. Okay. The subprime mortgage crisis took a toll on the global investment bank. Subprime mortgage crisis I have explained somewhere during the course of your batch. In USA, in around this year, 7-8, a maid will go to a bank, a cook will go to a bank, a driver will go to a bank, and the bank will say, how much loan you want? They say, we want this $2 lakh loan. Why do you want? We want to buy a house. The bank says, what is the security you can offer us? He says, this house only I'll offer. So you're not at a risk. This house is worth 2 lakh. I am taking $2 lakh from you. If you don't pay, you take the house. Fair deal. Yes or no? looks fair, but the problem is the bank started giving loan to so many people whose credit rating or credit score or ability to pay is subprime, below prime, not good. Normally they would have rejected, because one of the factors that we must also see while lending, can he repay? Bank knew he will not repay, but bank said, okay, doesn't matter. At least in our books of account, we'll have a loan portfolio, and then we are going to securitize it, raise the money. So my headache is over. Now it is the headache of that other SPB who will take this advance from us. SPB says we will issue bond and raise money. It's the investor who will suffer. Why I am bothered? Is it right? Investor got it insured. He said, why I am bothered? Insurance company will take the hit if something goes wrong. Insurance companies thought that there is a house. What will happen? At the most, I will sell the house, recover my money. So they started giving insurance policy for a very low premium also. If they would have charged $100 premium for that, usually they charge $5 only. Okay. So people started defaulting in payment of installment. So bank repurchased the property. Again, so far so good. But then, if all banks start repurchasing the property from thousands and lakhs of people, now you see the problem. Banks are now flooded with property. Instead of bank, now they have become owner of hundreds of thousands of properties now. So what they will do? Sell. What is the problem now? Demand supply equation has completely changed now. There is no buyer for those property. Because everybody in this cycle assumed that there is a property. Property will be sold, we'll recover our money, so there is no major risk. So insurance companies came into trouble, because then they had to pay the premium, they had to pay the claim. Investors came into trouble. SPVs came into trouble. Companies came into trouble. Okay. That was the problem. And this problem magnified because they had created many derivative products also on this kind of loans and advances. So that was the subprime crisis. So then activity went down slightly. A major reason for the crisis is that these investment banks were not under the control of either the Federal Reserve Bank or the US Security Exchange Commission, which made it easier for them to take the risk. These investment banks were run by MBAs mostly from top ranking institutions, and they are taught to take high risk. First of all, they are taught to take high risk. Their salary and bonus also depends on how much profit you have made for the company. So they take big risk. Big risk sometimes can give you big reward, but sometimes if it fails, then it will fall like a pack of cards. Which started as a result of financial crisis worsening in the late 2008. The biggest investment banks collapsed. So some of the big names you will see here, big names. Okay, those companies were worth billions of dollars at that time. Bear Stearns was acquired by JP Morgan Chase in March 2008. Lehman Brothers filed for bankruptcy and was declared bankrupt in September 2008 because they don't have money to pay the installments only, or cash, whatever cash they have to pay. They were sitting on assets, but they didn't have liquidity. Asian and European operations of Lehman Brothers were bought by Nomura, another investment banking company. So in Bombay also, Lehman Brothers had an office. It is not there now. It is taken over by Nomura. One of my students was working in this Lehman Brothers, I remember, and he was crying. I said, "Why are you crying?" He said, "I lost my job. This company is about to be liquidated." And North American Lehman operations were taken by Barclays Capital. In fact, some of them were forced by the government of USA at that time to acquire. Is it right? Because they might not acquire, but the government of USA, sometimes they interfere and they force you to acquire, because see, thousands of people would lose the job. It's not only job, many people have invested in the whatever security they might have issued, they would also lose. Bankers would lose, insurance company would suffer. So the first priority was to make them survive by merging it with other companies. Merrill Lynch was acquired by Bank of America for $50 billion. Okay. Goldman Sachs and Morgan Stanley converted themselves into commercial banks so that they will be now under more control, more regulations. And after this in USA, the regulations also become very strict now. Plus, they have completely revamped the disclosure requirement. So you have an accounting standard financial instrument which has been completely revamped after 2008, and now the disclosure standard 107 in India's or IFRS 7 is very comprehensive now, where they have to give disclosure about their credit risk, market risk, this risk, that risk, sensitivity analysis, so that it gives you a hint in advance if something is going to go wrong. People can take necessary action. Some companies were funded by government also, yes. Bailout was done. Bailout is not only in India, bailout is in USA also. So in USA that time, people said when it comes to making profit, US is a capitalist economy. When it comes to sharing losses, US is a socialist economy. Okay. But then US government at that time acted very fast, swiftly, and they were able to take it out of that problem. Otherwise, it could have spread to other countries and across the globe also. It spread, but then they were able to. There were riots in many European countries also. Yes, but then greed has its side effects. Yes or no? Yes, people started looting other people. What they will do? They have no jobs. You are right. Don't get emotional. Come to the next paragraph. You become emotional very soon. The collapse of these towering investment banks were felt in the Indian investment banks also. There were drop in the fat fees. Fat fees means huge fees they used to charge earlier. And revenue for these banks. Now there is no client only. In this middle gloomy environment, there is opportunity for investment banks to go global with properly designed strategies. Okay. Presently, the growth rate of Indian economy is slow, but it is resilient and performing better than many developed countries in the world. Capital market is also performing well. Nifty and Sensex are also doing good. They are very high compared to 10 years ago. Many IPOs have successfully entered in the year 2016-17. However, investments can enhance their growth by exploring new and alternate market. Investment banks, write down. Investment banks can enhance their growth. This is the advice Institute is giving them. Investment banks can enhance their growth by exploring the new and alternate markets, developing strong and long-term relationship with new and existing client, giving quality advice to client, and assisting them in every stage of their growth. Hiring qualified staff like you, and promoting ethical behavior. Like you only. So if you follow this advice, maybe the future of investment banking is bright. Now we'll come to the legal aspect in India. Even if you get bored, I don't mind. These few paragraphs now we are going to study deals with SEBI regulations dealing with merchant banking. So in SEBI regulation, what these investment bankers are called? Merchant bankers. And then there is a long list of regulation, and you have to know this regulation exists. And since you can open your book and write, good news, at least know that it exists in your notes. Who is a merchant banker as per SEBI? Who is a merchant banker as per SEBI? As per SEBI Merchant Banker Regulation 1992, merchant banker is any person who is engaged in the business of, what are the business they are engaged in? Issue management. Either by making arrangement regarding selling, buying or subscribing, or acting as a manager, consultant or advisor, or rendering corporate advisory services in relation to such issue management. If you are involved in this activity, issue management, making arrangement regarding selling, buying and subscribing, or acting as a manager, consultant or advisor, or rendering corporate advisory services in relation to such management, then you are a merchant banker. When we started this chapter, this is what normally an investment banking firms do. Is it mandatory to appoint a merchant banker? This question was asked in the exam. The answer is yes. For both public issue and right issue, it is mandatory to appoint a merchant banker. So tick mark this line because there was a question in the exam. What is the task of a merchant banker? Merchant bankers are basically facilitator or coordinator. So many agencies are involved in a public issue. Okay, companies involved, SEBI involved, stock exchange, banker, registrar, then depository, lawyers, custodian, etc., transfer agents, brokers. But there must be somebody who will coordinate with all of this, and this is that fellow, merchant banker. Okay, it coordinates the process of issue management by helping the underwriter, registrar and bankers in pricing and marketing the issue. Then it helps the companies and these people in complying with the SEBI guideline. At every stage in India, law is applicable and you have to ensure you comply with. Don't go on the wrong side of the law. Ignorance of law is not an excuse. Okay, you should have money in your pocket, fill in the blanks. Now, next, what are the restrictions on merchant bankers? What are the restrictions on merchant bankers? Are they restricted from doing something? So you see the restrictions are, and this you tick mark as a question in the exam. Merchant bankers are restricted from doing following activities. Which of them is right? So following activities they can't do. Prohibited from carrying on certain activities like acceptance of deposit, leasing and bill discounting. You can't do. Not allowed to borrow any money from the market, and also debarred from engaging in the acquisition and sale of securities on a commercial basis. Responsibility of merchant banker as per SEBI ICDR regulation. Underline. There is a chapter number 16 which deals with SEBI guideline on ICDR, LODR, mutual fund, insider trading, etc. So in case if we find that we have covered something earlier, we can save time there. SEBI ICDR regulations. What is ICDR? I don't know. ICDR. Information. Disclosure. One word is right. Disclosure. ICDR. Issue of capital and disclosure requirement. That's little better. And what is LODR? listing obligation and disclosure requirement. Very good. So let us see responsibility of merchant banker as per SEBI ICDR regulation. Okay, first is communication. In respect of all public communication, issue, advertisement and publicity material, so wherever they are giving any information like advertisement, publicity, what is his duty? The issuer shall obtain approval from the lead merchant banker responsible for marketing the issue. So the issuing company has to take the approval of the lead merchant banker. Issuing company will take approval from lead merchant banker responsible for marketing the issue and also make copies of all issue related material available to the lead merchant banker at least till the allotment is completed. So then what will lead merchant banker do with this? He will check whether all the disclosure is appropriate or not. It should not be misleading. Then second thing he has to check, lead merchant banker, and communication and announcement regarding closure of issue shall be made only after the lead merchant banker is satisfied that at least 90% of the offer through offer document has been subscribed and a certificate has been obtained to that effect from the registrar to the issue. So when will you close the issue? If the lead manager is satisfied that 90% of the subscription has been received and a certificate is obtained from the registrar. Now next responsibility is compliance certificate. The topic is responsibility of merchant banker as per ICDR regulation. So compliance certificate, merchant banker shall submit a compliance certificate in a format specified in part D of schedule 13 for the period between date of filing the draft offer document with the board. Who is the board here? SEBI. And the date of closure of the issue in respect of news reports appearing in any of the following media. So what are the media? They have to submit whatever news that has appeared. Newspaper mentioned in sub regulation 3 of regulation 9, major business magazines, print and electronic media controlled by a media group, where the media group has a private treaty or shareholders agreement with the issuer or promoter of the issue. So in all such newspaper where the article has appeared about this issue, which is belonging to which group, which has an agreement or private treaty with the issuer or promoter of the issuer, you have to make a disclosure, because then what these medias do, as you know, they will promote that issue. They will give more and more information about that issue. So that kind of compliance certificate you have to give. Next is copies of offer document to be made available to public. The issuing company and the lead merchant banker shall ensure that the content of the offer document posted on the website as required in this regulation are the same as that of their printed version as filed with the registrar of companies. What is appearing in website and what they have filed with the registrar should be same. Board and the stock exchanges, there should not be mismatch, because people will have an access to website. So in website it should not happen you have given all rosy picture, whereas what you have submitted to the registrar and companies board SEBI may be different. So that you have to ensure, otherwise you will have to pay a lot of penalty. The lead merchant banker and the recognized stock exchange shall provide copies of the draft offer document and final offer document to the public as and when requested. So they are supposed to give this offer document to the public in case if the public want it. Redressal of investor grievances. What is the next responsibility? Redressal of investor grievances. What is the meaning of grievances? Person is hurt because you might have misguided, cheated, not given proper information service. Then you can complain to the respective authorities, and then this merchant banker have to ensure that their grievances are redressed. So the post-issue lead merchant banker shall actively associate him with post-issue activities such as allotment, refund, dispatch, and giving instruction to syndicate members, self-certified syndicate banks, and other intermediaries, and shall regularly monitor redressal of investor grievances arising therefrom. These are the situations when you have some problem. Allotment. Person may complain that I have not been allotted, I have not got my refund, I have not been dispatched some refund letter or refund check or whatever. So whenever you receive such kind of complaints, it has to be settled. And who has to check that? Lead manager. Due diligence. Next responsibility. Lead manager shall exercise due diligence and satisfy himself about the all aspect of the issue, including the veracity and adequacy of disclosure in the offer document. So that is another responsible area. Due diligence. Ensure that every compliances has been done. All disclosures are given. Audited financial statement in the offer document. Merchant banker shall also ensure that the information contained in the offer document and the particular as per the audited financial statement in the offer document are not more than underlined. These are the questions they ask you from some corner. It should not be more than 6 months old from the opening of issue. Very old data you can't give. So the latest will be 6 months, not more than 6 months old. So these are main responsibilities. What are other responsibility of lead merchant bankers? Other responsibilities. Now there is a long list here. About 6 or 7 points are there. Quickly go through it as per your CB ICDR. The lead merchant banker shall call upon the issuer, okay, its promoter or director, or in the case of an offer for sale, the selling shareholder, to fulfill their obligation as disclosed by them in the offer document and as required in terms of these regulations. So lead manager has to continuously follow up with this promoter, director, to ensure that whatever disclosures and compliances are to be done are being done. The promoters are all rich businessmen. They don't know much compliance. Okay, so you have to make them follow the regulation, make them sign, make them disclose, etc. Like in your offices, your client is a happy, lucky person. You have to follow after him. Sir, please, 31st October has come. Please, today at least give the documents. We can prepare your audit report. Otherwise, you have to pay the penalty. He's not worried about that also. CA is more worried. Same thing here also. Businessman has no idea what regulation you have to comply with. So these merchant bankers continuously inform them. That is the reason they have mentioned here. Lead merchant has to do that. The post-issue merchant banker shall continue to be responsible for post-issue activities till the subscribers have received the security certificate. In case of physical certificate, he has to ensure that they have received certificate. Nowadays that problem is not much. Credit to their demat account. Yes, this he has to ensure that whatever shares they have been allotted has been transferred to their demat account, or refund of application money, and the listing agreement is entered into by the issuer with the stock exchange, and the listing or the trading permission is obtained. So next, is it understandable? Third, the responsibility of the lead merchant banker shall continue even after the completion of the issue process. In case of absence of definite information about subscription figure, the issue shall be kept open for a required number of days to avoid any dispute at a later date by the underwriters in respect of their liabilities. So he has to ensure that underwriters who have underwritten, they are given fair dealing. So issue can be kept open and let the underwriters understand what is their liabilities. Next is the issuer shall ensure that transaction in security by the promoter. Understand this. Transaction in security by promoter and promoter group during the period between the date of registering the offer document. What promoter has done? They have registered the offer document. That means they know that now the company is going to issue the shares in some time with the registrar of the company, or filing the letter of offer with the designated stock exchange as the case may be, and the date of closure of issue. If there is any transaction by the promoter during this period, which period? Date when offer document was registered with registrar of companies and the closure of the issue. If any transaction takes place with the promoter or promoter group, then it should be reported to the recognized stock exchange where the specified security of the issuer are listed. So this is like a case of insider trading. So inform it. Inform to the exchange that the promoter group has done transaction in the security within 24 hours of the transaction. If the shares are not, you can always do other transaction outside the stock exchange. Promoters can buy the shares from the company. They can convert their warrant into shares. Company can give some shares to the promoter group, because public issue is not yet complete, closed. In case if it is there, chances are less. But in case if it is there, you have to report it. Because it is written in the SEBI ICDR, it must be allowed by the law, only then they have written this. Is it right? Point number 6, the pre-issue and post-issue obligation of the merchant bankers have been discussed in detail later. Next line. Where the shares are not frequently traded, the price determined by the promoter or shareholders having control and the merchant banker taking into account valuation parameters including book value, comparable trading multiple, and such other parameters as are customary for valuation of shares of such issuer. So this is the valuation method they are suggesting. In case if shares are not frequently traded, it may be for a right issue, for example, because if it is a first time issue IPO, then the line is not applicable. So in case if you are going with a follow-on offer or right issue, and if the shares are not traded on a frequent basis, then what you do, use the following method of valuation: book value multiple approach, comparable trading multiple like P multiple, and such other parameters. So like in India we use P ratio, book value multiple for valuation of such share. After this basic discussion of SEBI ICDR, now two things we will discuss: pre-issue management by merchant banker, and below that there is a post-issue management by merchant banker, which your institute had written some paragraphs above, will be discussed in detail later. Yes or no? Pre-issue means before issuing the shares to the public, what are the activities these merchant bankers do. Merchant bankers play a very important role in whole issue management. Point number 1, submitting offer document. Offer document is like prospectus, where we are asking people to invest. So along with offer documents, certain other documents are required to be submitted. So who has the responsibility of submitting all these documents with a SEBI? This merchant banker. What are the other documents they have to submit usually? Memorandum of understanding. Have you heard memorandum of understanding? Not memorandum of association. MOU. MOU with whom? An MOU has to be entered into between lead manager and the issuer company, specifying the rights, liabilities and obligations. That MOU also you have to submit. Merchant banker and issuing company will sign an MOU. In their MOU, rights, obligation, liabilities are mentioned. The lead merchant banker has to submit the draft offer letter along with the MOU to the board, that is SEBI. Just like it's like authorization letter only. Okay. Then next activity in pre-issue management by merchant banker is inter se allocation of responsibility. In case of under subscription of securities, the lead merchant banker responsible for underwriting arrangement shall fulfill underwriting obligation. Suppose there is an under subscription. What is under subscription? All shares are not subscribed by the public. So lead merchant banker will fulfill his underwriting arrangement and make sure that underwriters pay the amount of devolvement, and the same shall be incorporated in the inter se allocation of responsibilities. You have studied this underwriting chapter. A, B, C, D were underwriters. A have underwritten 30%, B 30, C 20, D 20. So this person, merchant banker, in case of under subscription, he has to ensure that these underwriters fulfill their obligation and pay the amount to the company. He will tell each underwriter how much share you have to purchase, how much amount you have to pay. That is inter se allocation of responsibility. And then due diligence certificate. Merchant banker shall exercise due diligence and submit a due diligence certificate to the board. Which board? SEBI. Confirming that all disclosures made in the draft prospectus are true and fair. Wow. And are capable of ensuring that the investor take a well-informed decision on that basis. So this certificate will be given by whom? Merchant banker. To whom? SEBI. So you'll be able to write in the exam who will give to whom? Merchant banker to SEBI, not to the company's management to the SEBI. So these minute points you have to keep in mind. In case of listed company going for a further issue of capital, a chartered accountant like you or a company secretary shall sign the following certificates certifying that. Now who has to sign this certificate? Not merchant banker. CS, they will certify that all refund orders of the previous issue. Now this is a second issue, follow-on offer. So in case if there is any refund to be given under previous issue and all security certificates of the to the allottees have been dispatched in a prescribed manner and within the prescribed time. So this is like a moral pressure on you. If you are going to raise funds for the second time, then the CS or CS will certify that in the previous issue refund was given. Share certificate was issued in the timely manner, prescribed manner. The securities were listed in the stock exchange as specified in the offer document. This is like a moral pressure on the company's management, because in case if they want to raise money subsequently and if they get a negative report from CA or CS, it is difficult. Next is undertaking. The merchant banker shall also submit an undertaking at transaction in security by promoter. This we have discussed. Between the date of filing of offer document with registrar of company and the date of closure shall be reported to the exchange within 24 hours of the transaction. Did we cover this also? This is for follow-on we are discussing. It was for the, in earlier case also probably the institute wants for follow-on only, because that was the general responsibility given without specifying. Since it is given means it is allowed by the law. Okay. Which are going to get ICDR and LODR, not to the existing listed company. Yeah, both listed or about to be listed. So it means it is allowed that you can issue share to promoter, and then you have to inform within 24 hours of the transaction, because promoters otherwise will use the insider trading. At least now the public knows that this is the share which promoters are also trading. And then submission of the list of promoters group and other details such as, my God, you have to disclose their PAN also, bank account number and passport number of the promoters to SEBI. Which passport? Whatever passport they are holding. If they are holding passport of India, they will submit that one passport number. Holding more than one passport? I don't know. You ask me some simple question. I will only explain what is written here. They can hold multiple passports also. How they can hold multiple passports? Two countries. Vijay Mallya has two passports. No. You can't be, in India, you can't be a citizen of other country. As per Indian law, you have to give up the citizenship of other country. What he must have done is some jhol jhal, okay? Otherwise, in India, we don't allow you to hold two citizenship. No, how you can manage? To whatever Indian constitution I had learned, they don't allow you two citizenship. You have to take Indian citizenship. Yeah, let him come to India, then we will see what to do with him. Appointment of intermediaries. Okay, wait. To my knowledge, you can't hold two passports, but I'll just check. This is a good question. I'll ask the passport department, can we hold two? Okay. I'm going to today passport office, don't worry. So I'll ask them this question. So hold this question for some time. Okay, wait. Appointment of intermediaries. I am going to passport office today. I am going to ask this question. Can I get two passports for two different countries? So then we will answer your query. Appointment of intermediaries. Lot of activities are involved in pre-issue. When you have to tie up with many people. So who will do all this tie-up arrangement? Merchant banker shall ensure that intermediaries, banker to the issuer, registrar to the issue, etc. are duly registered with SEBI. Not only you have to tie up with different parties involved in the issue, also take cognizance that they have been registered with SEBI. Those who are not registered with SEBI cannot be involved in this process. We shall ensure that intermediaries are capable enough to discharge their duty. Now, this is subjective, but in his opinion, they are capable. he shall also make sure that the issuer company enters into an MOU with the intermediaries. With all intermediaries, the company should enter into an MOU. Next is underwriting. The merchant banker shall satisfy themselves about the ability of the underwriters before their appointment. Because somebody says, I underwrite 3 crore shares. What if he has to pay? He should have financial capability to pay the amount if you have to make the payment in case of under subscription. In respect of every underwritten issue, the merchant banker shall undertake a minimum underwriting obligation of 5% of the total underwriting commitment or rupees 25 lakh, whichever is less. So this is underlined minimum underwriting commitment 5% or rupees 25 lakh, whichever is lower. Offer document to be made public. The draft offer document filed with SEBI shall be made public for a period of 21 days. From the date of filing the offer document with the SEBI. 21 days underline. In one MCQ, they have mentioned 30 days. But in India, it is 21 days. USA, again, it is 20 days. No complaint certificate. Lead merchant banker shall file with SEBI a certificate after the expiry of 21 days, as mentioned above, highlighting the list of complaint received from the public. So that is pre-issue management. Now we'll discuss post-issue management. Okay, just quickly in 5 minutes, most of the things we have covered. Post-issue management. The merchant banker shall ensure that every application form is accompanied by a copy of abridged prospectus. That is a small summary version of the main prospectus. So if you have seen any application form of issue of share, you will find there is a small prospectus attached to that, which gives you brief highlight of what is printed on the main prospectus. The merchant banker shall also ensure that the issuer company has entered into an agreement with the depositories for dematerialization of securities. The post-issue lead merchant banker shall submit the following post-issue monitoring report. What are the documents he has to submit? A 3-day monitoring report in case of issue through book building route. Issue through book building route, which shall be submitted within 3 days from the date of allocation in the book built issue. So after 3 days underline. A 3-day monitoring report in case of fixed portion of book built issue, which shall be submitted within 3 days of the closure of the issue. A final post-issue monitoring report shall be submitted within 3 days from the date of listing. Final report 3 days from the date of listing or 78 days from the date of closure of subscription of the issue, whichever is earlier. Further, the due diligence certificate shall be submitted with the final post-issue monitoring report. Due diligence certificate after the post-issue, along with post-issue monitoring report, and redressal of investor grievances, again same. The post-issue lead manager shall address the investor grievances with regard to certain post-issue activities such as allotment. I think this has come in the general responsibility also. A refund, dispatch of share certificate and other correspondence giving instruction to self-certified banks. The next task is coordination with intermediaries. Who are the intermediaries we have discussed? Bankers, registrar to the issue, transfer agent, depository, custodians. Okay. The post-issue lead merchant bankers maintains a close coordination with the registrar to the issue and deputes officers at the offices of various intermediaries to monitor the process of application, including ASBA application, full form of ASBA, application supported by blocked amount, demat account, blocked amount. We have discussed in earlier chapter. Nowadays, you don't have to send a check to the company or demand draft to the company. You can just go to your bank and the bank will block that amount. You will continue to get interest on that amount. And if you are allotted the share, the bank will transfer the amount to the company's account. And if you are not allotted, the amount is released, unlocked. But then the whole process of sending check, taking refund is eliminated. Who has to coordinate all this activity? This lead merchant banker. It supervises and ensures that security certificates are properly dispatched, refund orders are completed, securities are listed. Now next is underwriter. What is the role of the lead manager with respect to underwriters? In case of undersubscribed issue, the merchant banker shall ensure that the underwriter honor their commitment within 60 days from the date of closure of the issue. In your intermediate, you have learned one chapter. Last line of that question was, therefore, underwriter's liability. So calculate how much amount they have to pay and multiply by the amount receivable per share. That amount you collect from them within 60 days. The lead merchant banker shall furnish information to SEBI in respect of the underwriters who have failed to pay the underwriting obligation. Complain to SEBI. This underwriter has not paid. Then the SEBI will take whatever action they have to take. Maybe they will cancel their license. Then what is his role with respect to banker to an issue? The post-issue lead merchant banker shall ensure that all the money received pursuant to the issue. Bank have an important role. They receive the application money. Whatever application money you have received is kept in a separate bank, not in the company's bank, and shall be released only when listing permission is received from all the stock exchanges where it is proposed to be listed. Post-issue advertisement related function. A post-issue advertisement has to be given by the merchant banker within 10 days from the date of completion of the various activities in a leading English newspaper. Which newspaper? Leading English newspaper. Okay. After 10 days, underline 10 days. All these days, months, underline that all the activities have been completed in a leading English newspaper, one Hindi national paper, and a regional language. Regional language? Which regional language? Daily, circulated at a place where the registered office of the company is situated. So if registered office is situated in Maharashtra, then in one regional Marathi newspaper, Sakal, Samna, Lokmat, okay, you have to give that advertisement. Basis of allotment you have to disclose, value and percentage of successful allottees, and date of dispatch of certificate and date of dispatch of refund order. Now we'll come to the last paragraph of this wonderful chapter. The post-issue merchant banker shall ensure that issuer, advisor, broker or any other entity connected with the issue do not publish any advertisement. What the lead manager has to ensure that these parties do not publish any advertisement stating that the issue has been oversubscribed or indicating investors' response to the issue during the period when the public issue is still open for subscription by the public. So till the public issue for subscription is open, issuer, advisor, broker or any entity connected with the issuer, keep your mouth shut. You don't have to sell that the issue has been oversubscribed. Don't create hype. Media can do whatever they want to do. We can't have a question on that right now. Maybe SEBI guidelines should protect media also. But at least those who are responsible people, we can stop them. Question A. 2 MCQs quickly. Choose the most appropriate answer. Following is true. Means only out of 4, 1 is true. Read yourself. Give me the correct answer. More than one chapter may be involved now. An investment bank needs no license from RBI. SEBI has to approve the draft prospectus within 30 days of the submission to it. If no reply is received within 30 days of submission, it is deemed to have no objection and the company may proceed with public issue. A merchant banker shall not apply for the shares of its client company. An asset management company is a banking company governed by the RBI to deal with mutual funds investment in different sections of the financial market. Now see, the institute has asked this question. It is from one of the either exam paper or model test paper. Multiple chapters are involved here. Open book exam will not help you. You have to know this kind of answer in advance. So which is the right answer? Investment bank need no license from RBI. Did we discuss any time in the last 2 days investment bank needs license from RBI? Merchant bankers have to be registered with RBI. SEBI. Okay. No license is required from RBI is a true statement. Had it been written they require license from RBI, then it is a false statement. This is a true statement. Second one is correct. SEBI has to approve the draft prospectus within 30 days of submission to it. If no reply is received within 30 days of submission, it is deemed to have no objection and the company may proceed with the public issue. Is it 30 days or 21 days? So they have to reply. They have to reply. You can check the SEBI has to reply. SEBI has to reply. A merchant banker shall not apply for the shares of its client company. Can. Underwriting. And this is a complete false statement. An asset management is a banking company. Is it a banking company? No, it is false. It is not a banking company. It is just to manage the funds of the investors. And it has to register with SEBI, not RBI. So the answer is A. And the reason they have written investment banking is entirely different from commercial banking, which needs license from RBI. Further, permission is not automatic. Objections are raised, set aside, and then approved. Commercial banks needs license. Last question. Once client have identified a particular target company to be acquired, so it is a buy side M&A. Which side? Buy side. Particular company to be acquired. Yesterday I said you have to know the sequence. Then what is the sequence in which the advisory services are provided? Read carefully, think for 10 seconds and answer. Bolo. B is the right answer. First you have to do shortlisting. That is the target company. Then you prepare and execute the term sheet. Then you conduct due diligence. And then the transaction closure. Computer Ji, please suggest the correct answer. B is the right answer. This chapter is over.